So the DM was specifically asking the question about magnets, right? How is an IC a magnet? And it's not a magnet like we think about, say, the JPM put spread, the collared put spread, where that short strike, where you have just like naked short interest somewhere. It doesn't necessarily behave like that, so I thought I'd walk through the dynamics as I see them. There's always nuances here, of course, but just want to talk this through so you get a kind of a view of what is an IC and what does the delta structure look like for an IC and why is it important. So a short iron condor is actually comprised of two verticals, and I've got the profit and loss here. This is real time, so this blue line is called the terminal P&L. This is at the end of the day today. This is actually what that IC holder has, and we've identified that it's a male out of London, so we're narrowing down. But all of that said, the terminal P&L is effectively the credit when they put this on because they sold it. You're actually selling a put spread down here, and you're selling a call spread that's up here, and they're 5 wide, and I've got them down here, as you can see. So we've got the 6140, 6145 on the high side, and we're short the closer one that's in. That's why you get a credit. And on the downside here, we've got the 6090 and the 6085, selling the 6090, and that's why you get a credit. So you add those two credits together, and it gives you basically the value above zero. And this is a single contract, as you can see. Now, the reason people do this is if you think the price isn't going to go outside the windows, then you just melt up through the day. And that's what these interim lines are. The gray line is the right now line. The green line is a little bit in the future. The red line is even further in the future this afternoon. And then the blue line is where you would have maximum profit for this. Now your risk is asymmetric, right? So rarely are you able to get a balanced IC out of the starting blocks. And there's a lot of reasons for that we won't go into. Some people leg into these, so basically you could potentially, if price walks up in this general direction, you could get a 50-50, meaning you have a $250 credit on this side and a $250 risk profile on this side. And the same thing, if we walk all the way on down, you could potentially get that. Rarely do we get that, and we never try to actually do that when we put an IC on. So the idea behind an IC is you take advantage of a theta decay. Volatility you want to be relatively stable if you can. So Vega and all that are fairly benign in this environment, or IV is not really changing, so that you're not dealing with a lot of crush there per se, because you've got long and short, etc. They would be compensating to a certain degree. But big picture, this is what it looks like. And people put these on to pick up, effectively you hear the statement to pick up pennies in front of the steamroller. It's not that bad. And here at GammaEdge, I do believe we have really good ideas on where we're going to potentially violate and where we don't violate. So when we overlay the GE tools with just a generic structure like this IC person has done, we often can see asymmetries in the risk profile, and we can adjust accordingly and do whatever we want to do. Okay, so this is what it looks like. This is your P&L, and you're betting that you're not going to, by the end of the day, you're not going to go below your short strikes, and that you're just going to melt up. Now you can see, for all intents and purposes, your degrees of forgiveness, I guess, improves as you get longer in the day, right? So as we go through time, the gray line goes to the green line, goes to the red line, eventually goes to the blue line. Now, all of this happens later in the afternoon. Right now, this width that you see here isn't really going to materialize until later. So the sensitivity of this thing, of your profits, really, if you get a lot of price movement during the day, you can take some heat. So being below this, you've got to really have conviction that you're not going to go above, because your loss, obviously, if you fall over, this is where time is invariant. So that price right now is like 61.40. If we were to go above 61.40 and just hold there, you would eventually melt upward, but it's not going to be to the end of the day. And if you start going this way, you start collapsing downward as time goes on, right? So you're going to you're improving your chances of losing money if you go above where these interim P&L lines intersect. Okay, so that's the IC. This is the IC that we were presented with today, and according to the logs and the best guesstimates of the size, it's anywhere between 50,000 to 53,000 contracts. Now, that's a pretty big set of positions, and it's going to have an influence on the market, which I think is probably the most important thing, and especially in context of this this concept of pinning or being pinned or being a magnet. What I did here is I flipped over to a delta presentation, and the blue is again the terminal delta, and you can see that there are a couple spikes here, and those spikes are the end of day spikes. So the blue spikes are at the end of the day, and you can see the put spread, the short put spread actually has a long delta on the retail side, and that the call spread has a short delta on on the put side is long delta, and on the call side is short delta. And that's because you're short those inner contracts, right? Because we were short the overall complex. The interim deltas, you can see what's happening here, and you can see that right now, just coincidentally, or not, this goes to actually what I wanted to talk about here. We're hovering right around the zero delta line. This is an important part of an iron condor. An iron condor, a short iron condor, like you see here, the midpoint, which is where this person has been putting these things on in general, is at the close of the previous night. And so overnight they're baking literally right at the zero delta, not counting for skew and some of the other things that can cause an imbalance between the put side and the call side. But all, hand waving this away, you can basically say, and you can see that we're near delta zero in some form of the midpoint of this overall structure. Now, why is that important? So as market dynamics, so you're watching vol M, you're watching vol D, and you're seeing price kind of drift down, what's happening in the overall structure when it's a fairly large structure like what we have today, right? 50,000 plus contracts. We're actually making the retail book, in this particular case, this trader who's got 50,000 of these things on, we're actually making the market, the retail book, longer in deltas. Right? So when we make the book longer in deltas, the dealer, who's on the other side of the trade, is getting shorter. All things considered, as price comes down, the dealer has to buy to hedge flat. What does that do? Well, that's a buying pressure that starts pushing us upward. So market dynamics forcing us downward a slight amount responds or is responded to by the dealer pushing us back up. Right? And so we may see these periods today where we drift downward for whatever reason, and then we hit risk limits at various market maker, dealer, brokers, prime brokers, etc. And then they have to hedge, they have to do something, and then that forces us back up. That's the pinning that I'm talking about. And the same thing happens on the other side. As price drifts up, we're making our book more negative, right? The retail book. As our retail book gets more negative, all things considered, the dealer's book gets more positive. And they're more positive in deltas. They have to hedge by selling, and then that pins us back down to the neutral point, or the null point is how I described it in my notes this morning to everyone. We get pinned back into this midpoint. Now, this does not take into effect, when we talk about the overall structure, it does not take into fact that we're going to be moving up and down across a net OI structure. That is not uniform, right? You can see that there's all sorts of call dominance. And so we've got, depending on if it's in the money or out of the money, because as we all know, moneyness matters, right? Depending on the directionality of where the strike is and how it's being absorbed, we're actually going to be additive or subtracting due to charm, due to other influences of the day, and that's going to complicate the overall structure in general. But when we take the IC by itself as an artificial structure, the theory of the IC is that it tries to pin us towards the middle of the range all day. You can see that that null point is exactly where it is. The things that move us off the null point are due to intraday action and the convoluted OI surface that we have to navigate, right? So that's the structure that we talk about day after day after day. And then we overlay these artificial trades, not artificial in that they don't exist, but we overlay these big footprint trades on top of this, and it changes how the dynamics of the structure are going to behave. And we believe this is what this IC holder is trying to do as they double down in as CM says, in martingale fashion day over day, betting twice or three times. They went from 1x to 3x, and then now they've gone up. They didn't do 3x of this again from the 34,000 or 33,000 that they had yesterday, but they went up another 20,000, right? So their exposure, their net exposure across these 3 days is fairly significant, and they're trying to basically pin the market so that they stay within that theoretical area. And then by our tally of last night, we think they collected about $1.75 per contract. So they did collect some change, and they're trying to maintain between those two walls there. So the takeaway is this. When you are looking at an IC, the midpoint is the null point. So in a pure world where the OI surface was flat, right, it had zeros everywhere except for where you have the strikes of the iron condor, you would have this strike profile, or you would have this delta profile. But it's made more complicated now that we've got this type of surface that we have to deal with, and even more importantly, when we take a look at just the 0 DTE, we've got a lot of calls above, we've got calls below, which are in the money, and then we've got down here, we've got a lot of puts that are out of the money and decaying. So we've got this charm from down below us, which is very significant, which is pushing us upward. That's all of these out of the money puts that you see down here, at least in the gamma distribution that you see right here. So I would say from, the ones that really matter are probably going to be just below the IC legs in this particular area, and it depends on how we move up or down. And the ones that up here that really matter are going to be these that are, maybe 3, 4, 5 strikes, and then you can see how they go towards zero. So this is a range that matters, and so look at the net OI, and we can see in general we have a call structure across the board. Now there are some puts in here, there's no question, but in general we've got out of the money decaying calls above us, and we've got in the money calls below us, with a few strikes that are out of the money puts, which are decaying. And out of the money puts, as we know, decay in charm to be supportive of price. So all things considered, this IC structure has overlaid not a neutral structure. It actually came in a little bit higher than what we were anticipating, and as a result of that being up there a little bit higher, it is overlaying what I would consider a 0 DT bullish structure. So I think the pressures are upward, but we'll see, right? We don't know exactly what's going to happen, but we'll watch vol M, we'll watch vol D. A lot of noise going on right now as far as I can see in vol M and vol D, and we'll play it accordingly. Again, the call or the IC holder is betting that we're going to stay between the two short strikes. But they've overlaid a very powerful structure on top of a what I would call a bell curve, or a normal distribution structure, where it's actually quite positive. It's quite supportive, and as we go through the day, you're going to feel more and more upward pressure as we go. So hopefully this helps you understand, just kind of the fundamentals of an IC and what the dynamic is with delta, which we think is incredibly important. You could argue that, as you get closer to a short strike, there are things that are going on, but remember, right behind it, only 5 points away, is a long strike. And so you can see how delta changes in this particular area. So later in the day, if we get a chance here today, what you're going to see is you're going to see the out of the money portions of these things going towards zero faster, and you're going to see the in the money, moving upward to a certain extent. And you're going to see that on both sides here. So the closer you are to the strikes, perhaps the more influence you're going to see. We'll just have to pull out the popcorn and see how things go. So hopefully this is useful, and if you got questions, happy to address within the realm of our knowledge. Thanks.